Well, welcome everyone to today's webinar, Look Ahead, Post-Election Insights webinar series. This is part 2 of our 3-part series, with the last call happening tomorrow, December 8th. Thank you all so much for joining us. Before we begin, I wanted to take a moment to let you know that we are recording this session, and the recording will be both distributed to attendees via email, as well as available through our normal communication channels. As you have questions, you may post them in the Zoom Q&A located at the bottom of your screen, and we will address questions at the end of the call, or actually we might do that throughout the call as well. So if we are unable to address your question today, please email learning@nfp.com, and it will be routed to the appropriate party. At this time, I'd like to introduce our moderator for today's webinar, Suzanne Spradley, Senior Vice President and Associate General Counsel, CCO. Suzanne will now open the call, and Suzanne, the floor is yours.
Thank you, Matt, and welcome to our Post-Election Insights webinar series. We are fortunate today to have with us two individuals who have been on prior podcasts for us or prior webinars for us, Scott Sinder and Kate Jensen, both with Steptoe. Scott leads their Government Affairs and Public Policy group at Steptoe. He's located in DC. They have members of their team that have developed deep relationships with individuals at all levels of the legislative and executive branches of the federal government, and we have been fortunate to see some of that in action. They also have a broad understanding of some of the technical issues that pertain to employee benefits and the P&C insurance realm. Kate is also a member of the Government Affairs and Public Policy practice, and she focuses on legislative and regulatory counseling in the financial services, and she's particularly focused on issues that are related to the various lines of insurance. And so we are very glad to have them with us today. The format of today's discussion will really be Q&A. I will ask them a series of questions to get their insights on some of the issues that will pertain to our clients in this post-election environment. So with that, welcome, Scott and Kate, and we will start with our first question, and I will just throw it out to both of you so you can decide who will answer. But if you could just start with the executive orders and what we can expect in the first 100 days in terms of either changes to or new executive orders with I will say with the Biden administration. We're going to assume that at this point.
Go ahead, Kate. Why don't you kick us off?
Well, first of all, thanks so much for having us, you guys. Glad to be back with you. So for me, and look, I think we're going to see that the COVID response plan having a more sort of, I think, cohesive national approach to the COVID response, public safety issues. That's going to be priority number one for this administration. But aside from that, I think probably you'll see some quick executive order action in 3 primary areas. One is going to be in the healthcare space. 2 is going to be in the labor and employment space, probably. And then 3 will be dealing with environmental type issues. And I think basically you could probably use the Trump administration list of executive orders in those areas and then anticipate the exact opposite of what those executive orders sought to accomplish. And I think notably in the healthcare space, many of you probably saw that Mr. Becerra, the current Attorney General in California, former member of Congress, has been named or invited by President-elect Biden to be the HHS Secretary. So if you think about this in terms of, California has spent the last almost 4 years under Becerra suing the Trump administration for any number of things, but in the healthcare space, dozens and dozens of lawsuits. So he's coming into that position with, I would imagine, already a pretty good list of things that he would like to see unwound. And if those things were done by executive order in the Trump administration, again, would expect to see the counterpart coming out of a new Biden administration. But Scott, what do you think?
No, I agree with all that. And I think that that's where their majority of their policy action is going to be the first year probably of the administration.
And so if you thinking of like legislative insights coming out of the election and potential plans under a Biden-Harris administration, which one of those will impact, or what legislative insights can you tell us about that will impact employers? That's who's predominantly on the call today.
Well, I think that one impact of the election is you're not going to see nearly as much legislative activity as if the Democrats had had a larger majority in the Senate. My view is, regardless of what happens in Georgia, remember the Senate hangs in the balance. Right now we're at 50 to 48. If the Democrats were to take both seats in Georgia, it'd be 50-50, and Vice President Harris gets to be the deciding vote anytime there's a tie. Don't forget that the normal rules in the Senate normally require 60 votes to pass anything not 50. There was some talk about getting rid of the filibuster rules that sort of push you to that 60 vote requirement. I think it was going to be a tough vote for the Democrats anyway. I think in a 50-50 Senate, they're not going to be able to do it. You're going to have enough Democratic senators who are too middle leaning, who will not vote in favor of getting rid of the filibuster rules. So you're going to stick with that 60 vote requirement. There's one big exception to that requirement, even today. Well, two big exceptions. One is on nominations and the approval of them, but that doesn't really affect substantive legislation. But the other is on something called a reconciliation bill. There's one of these per year. It's a budget and tax bill. By rule, every provision included in such a bill has to only deal with budget and tax issues. And that can pass on a simple majority vote. But still, you have some center-leaning Democrats who are not going to be willing to look at any big, huge changes like a Medicare for all or anything that's going to really change the system. So I think no matter who stays in the chairs in the Senate, what you're going to see at most is small marginal changes. So we may finally take a serious run at reporting reform for the ACA mandate. We may get some relief on who's a full-time worker, the fight for the 40 kind of thing. I think that you may see some farmer reform on transparency. That's been very popular on a bipartisan basis. In surprise billing. Look, I still think there's a chance they get that done this year as part of whatever our colleague Tim Columbus calls the annual omnibus bill at the end of the year, the fur ball, because things just kind of stick to it. But I still think there's a chance we see some surprise billing reform that takes the planned beneficiary or patient out of the mix when there's that battle for payment for those out-of-network emergency services. But I think you're going to see much smaller scale on the legislative side over the next 2 years because the votes are so close in the Senate.
Okay, two questions that I have coming out of your comments there. One, with the surprise billing, could you expand on that and speak to which way you think it will fall in terms of how they determine the ultimate payment amount?
Well, that's the big sticking point, obviously, right? I mean, everybody's agreed that if you go for emergency services or if you're having a procedure at an in-network facility, then the ancillary procedures should be in-network price as well, or at a fair price anyway. The question is, how do you determine those fair prices when you don't allow balanced billing back to the planned beneficiary? And there are two popular approaches that have divided Congress. One would be to have some sort of external benchmark, like a Medicare benchmark or something else that you'd look to make the evaluation. The other is to allow an arbitration between the payor and the provider if there's no agreement. The provider community favors the arbitration. The payment community favors the benchmarks or some sort of schedule. I don't know how it's going to come out. There was a proposal that was sort of the third rail to let HHS, the Department of Health and Human Services, decide. There have been proposals to say that, procedures that are below a certain threshold would be on a schedule. And if it's more than a threshold, and some of those thresholds have been quite low, $1,000, $1,500, then the provider could arbitrate if they wanted to. I thought the momentum was really in favor of the provider community. It feels like there's a little retrenchment on that now, and that the payors are, maybe getting a little bit of an advantage. Senator Lamar Alexander is retiring. He's the chair of the Senate Health Committee, Health, Education, Labor, and Pensions. They have oversight of this issue. He has favored a schedule, but we'll see. I don't know really how it's going to turn out. From a inside the Beltway perspective, the ads on this have been really interesting. The provider community has run very aggressive ads, but they've been outed as primarily being funded by the private equity community that owns a lot of the emergency room facilities. So that has not played well for them. It may not be money well spent. We will see. Kate, tell everybody where I screwed this up.
Yeah, no. I think that's, Suzanne, to your question, this is the major sticking point, right? It's figuring out what that payment determination mechanism is going to be. The last I heard was that, there's a bipartisan group in Congress that's working on putting text together to get it attached to the furball. As Scott mentioned, our understanding was that pencils down, the deadline was last Friday for language to make it into any year-end package. I've not heard anything yet this morning about whether or not that was accomplished, but the last I heard was that group was leaning toward the option that Scott mentioned, where below a certain dollar threshold, you'll be under a benchmark. And then above that dollar threshold, they're going to send you to arbitration. So kind of splitting the baby. Question, of course, is what should that dollar threshold amount be? If it's as low as $750, which is a number that I heard thrown around last week, I don't know how far that gets those of us who are on the side of a benchmark approach. But I think, we'll know here, Scott, don't you think, within the next 48, 72 hours, whether there's any hope for getting something included this year, or if that falls apart?
Yeah, I expect to see language today, tomorrow latest, just what you say, 24 to 48 hours.
And then in terms of, you had mentioned that you don't foresee a Medicare for all push, and that we may be limited to the reconciliation process for really getting any type of legislation through. But could you speak to whether that would permit like a public option, for example? What types of things could get through a reconciliation process?
Well, that's an interesting question. I think you arguably, remember, a lot of the original ACA was actually done on a reconciliation vote. What happened is they did the bill and they got it done and it passed. This was the famous John McCain vote, right? It was his last vote. Did he vote on that or reconciliation? He must have voted on that, right? Oh, he voted, his last vote was on repeal. Never mind. I take that back. I screwed that up. But they did there were two bills that constituted the original Affordable Care Act. There was the original bill, then Senator Kennedy died, and he was replaced by a Republican. And so when they went back, they weren't going to have the votes, and they did the rest on reconciliation. I think you could do a public option, I think, on reconciliation. What you could not do is a Bernie Sanders type of approach where he's going to bar private plans, because that piece would be beyond the budget and the tax. But I don't think that there's appetite amongst the full Senate Democratic caucus to do a public option on reconciliation or otherwise. And so, look, you have some very moderate Democrats in the Senate. Senator Manchin in West Virginia. Senator King in Maine is technically an independent, but he caucuses with the Democrats. Senator Sinema in Arizona. Those are going to be very tough votes, all three of those people, for anything that's a material change to the system. I think that they'll be amenable to the more marginal tweaks, the reporting fixes, the 40-hour work week type stuff. But anything where you're talking about a dramatic reboot of the system, I don't think there's going to be a political appetite to do it.
And so you mentioned 40-hour work week. What would you foresee that potentially, you think that it'll get back to 40 hours fully, or 35, or can you speak to that a bit?
I mean, there's been legislation that's been pending for a while that would allow that instead of saying a full-time employee is anybody who works 30 or more hours a week, to put it at 40. Nobody's talked about any sort of middle ground on that. I actually think there's a fair amount of bipartisan support for it. The labor unions like it, which is always critical to the Democrats. It's been more of a vehicle issue, and it's been also part of what I think is kind of a classic argument in Washington that goes back for generations, and that's, do you get the little changes you can when you can get them, or do you fight to get everything done at once, on the theory that any little change makes the bigger changes, the more wholesale changes, harder later, because you picked off some of the votes that only care about the other stuff. But I think that it's feasible that we see that get done next year.
And so leading into my next question that will relate to the lawsuit, I imagine there's some bipartisan support for doing something on pre-existing condition. Have you seen anything on that topic?
On the ACA lawsuit in the Supreme Court?
Well, in terms of, should there be something with the ACA lawsuit that's not favorable in some manner, or that strikes down the pre-existing condition prohibitions, do you see any legislative, if you want to speak to the lawsuit first, that's fine, and then to whether there's potential legislative stopgaps that have been started to be put in place just in case there's an outcome that some don't prefer.
So there's no legislative stopgaps in place. So let's start on that, which doesn't mean they couldn't come later. On the Supreme Court case, we sort of kind of got into the things that I'm more on the lead on. We'll get Kate back in the mix in a second. But on the Supreme Court case, there's two issues before the court. One issue is whether the individual mandate, where there's no penalty associated with it, can survive constitutional scrutiny. If you recall, on the original ACA Supreme Court case on the individual mandate question, Chief Justice Roberts ended up being the deciding vote. And he said, you have the conservatives who said this is compulsory commerce and that's unconstitutional. The liberals said, no, this is totally fine as part of what government should be doing. What Chief Justice Roberts said on the mandate was, look, it's not compulsory commerce because you have a choice. You can choose to pay the fee and not buy coverage under the mandate. So that was the basis for his decision. It was a tax clause decision. So in 2017, a Republican Congress did not have the votes to repeal the law completely. So instead, what they did is they neutered the individual mandate by eliminating the penalty. Now, they did it on a reconciliation bill. They couldn't repeal the penalty because the parliamentarians said that the mandate, they couldn't repeal the mandate because that's beyond a budget provision. So they could repeal the penalty because that's strictly a budget issue. So they did. And then Republican attorneys generals, they sued the government saying, well, now you have a mandate with no option to pay the fees, so that's unconstitutional. And the Fifth Circuit agreed, and that's the first question before the Supreme Court. I believe that the conservative court will find that the individual mandate is unconstitutional with no penalty payment option. So then the bigger question is, what happens to the rest of the law? So the plaintiffs in the district court, they argued that the whole law has to go if the individual mandate goes. The government, the Trump administration, they argued at the district court that only the pre-existing condition requirement and the community rating provisions should fall with the individual mandate, that the rest of the law should survive. In the circuit court, the Trump administration joined the plaintiffs and argued that the whole law should be thrown out with the individual mandate. The Fifth Circuit, basically chastising the Trump administration's change in position, they agreed with the district court on the mandate, unconstitutional without the fee, but they were going to send it back to the lower court to look harder at whether the rest of the law falls with the mandate. So now the Supreme Court has both questions before it. Three possible outcomes. One is that I think, let's agree, I assume that the mandate's going to be thrown out. So what happens to the rest of the law? Three options. One is they say that it's severable, meaning that you can take the mandate out and the rest of the law survives and we're done. They could go the other way and find that the law is entangled with itself and it has to rise or fall together, so they throw the whole law out. Or they could send it back to the district court to look at this harder, like the Fifth Circuit said. I believe that there's almost no chance that they throw the entire law out. And I say that because conservative jurists, including Chief Justice Roberts and Justice Kavanaugh, both in recent cases have said that the presumption is against non-severability, meaning we always try to uphold the law to the extent we can when one of the provisions has to be struck down. There's also recent precedent where they've sent back laws like this to district courts to look at that severability question after they've taken out a piece of it. What's even harder here is you have a Congress who eliminated the penalty provision but kept the rest of the law in place. So clearly that you must assume under the applicable laws that Congress thought that the law worked without the penalty. And so that's going to be a confounder and it's ironic, right? Because this is a Congress that wanted to throw the whole law out. And the best they could do is throw out the fine, but they're kind of stuck with that. So I think if I were betting, I think it's probably a 60% chance that they just uphold the law and the case is done. A 40% chance, or I'll go 39% chance it gets remanded to the district court for further thinking on this, and less than 1% that they throw other provisions out. But your question was, well, what if they do? What happens? I don't know. Because it's an interesting conundrum, right? Everybody says that they're against, allowing pre-existing conditions to bar access to coverage. Everybody agrees on that. The issue is, how are you going to put that in place absent an ACA? If the ACA goes away, how are you going to mandate that? So I don't really know. And nobody is talking about that scenario. And I honestly think that it's unlikely we see that at least for 2 or 3 years, right? It'll take a couple years if they remand it for this to wind its way back up.
All right, Kate, do you want to throw some percentages out there as well?
I actually, Scott and I are in agreement on this one, not on everything, but on this one, I think I agree with Scott's assessment of the likely outcomes here.
I know those that watch Supreme Court hearings love to see which justices ask questions, and it was unusual that Justice Thomas actually spoke up and asked questions during this time. Can you, was there any insight from their questions, I guess, that you drew in how they asked questions or what questions they asked? And in particular, Justice Thomas.
So the first thing I will tell you is this parlor game about trying to divine what's going to happen based on the questions, it can be a fool's errand. Like so often the questions just disconnect from where it comes out. I didn't focus on Justice Thomas's questions. I did focus on Kavanaugh, Alito, and Chief Justice Roberts all pointing out in their questioning the general presumption in favor of severability. And, to me, that was consistent with those recent opinions and didn't surprise me, and it would be consistent with those projections on what happens.
So we have touched now on some different types of legislation and regulations that could emanate post a Biden era, into a Biden era, I should say. Are there any other legislative or regulatory healthcare type issues that we haven't addressed? For example, we've seen in the last year different proposals for Cobra subsidies. Do you anticipate, especially in the pandemic, that you see a bipartisan support for Cobra subsidies?
So this is one where it seems like President-elect Biden is very focused in this area, right? So he's done some speaking recently about what he thinks needs to be included in comprehensive COVID relief, and that he's going to be pushing hard for a big package as soon as he's sworn in. And he's very focused on this issue of individuals being separated from their employer as a result of COVID and some of the layoffs that have happened. And so without actually saying Cobra coverage, I think what that triggers in all of our minds is exactly that, right? That is obviously one area where you can help address that problem. The House's HEROES Act had very generous Cobra subsidies built into it to address this very issue, to help bring the cost of that Cobra coverage down for folks who have lost their employment. But then that was not included in the Senate's COVID relief package. So we actually think that this is an area that's probably currently being debated with this latest skinnier COVID relief package. It sounds like the consensus is that it's very unlikely that Cobra will be included in a skinny COVID package. But as I said, if they were to do something more robust as soon as President-elect Biden is sworn in, and he really throws the weight of the White House behind a bigger deal, we would look for something like that to be included. Otherwise, generally in the healthcare space, it's interesting. The council had a webinar meeting with CMS, the folks at HHS, just last week or the week before, about the individual coverage HRAs and how that's been going for them, and they are still aggressively supporting those HRA options. And they were talking about how they've now built those options into the exchanges and other public resources to get employers more comfortable with offering this option, right? Their perspective is that they think that the new administration is generally on board with that HRA expansion as a sort of market stabilization measure, effectively. But I think there are other areas where we're going to see a reversal of what the Trump administration did. So me personally, I think the first thing out the door is short-term limited duration insurance. The Trump administration really relaxed the rules for those products, whereas the Obama administration had very strict sort of parameters around those products because they're not covered under the ACA. So they sort of view that as a destabilizing piece. So I think that's gone. The association health plan stuff, that's really quieted down. It's not getting nearly the attention that it was initially. But I imagine that a Biden administration is not going to like the liberalizing of the AHP structure either. So I think those are a couple of areas. And then I think, as Scott mentioned at the beginning, transparency is sort of one area right now where legislatively and in the regulatory space, we're continuing to see a lot of momentum and talk. So that was focused, about a year and a half ago on the pharma space. So the drug manufacturers, the PBMs. But as many of you guys know, especially if you're a self-insured employer, they just came out with a big transparency rule for the plans, insured and self-insured. And so I don't expect we'll see any rollback in any of that in a Biden administration. It's hard to be anti-transparency about anything, but they've done a lot in that space. And so but I'm kind of with Scott that with the dynamics being what they are politically in Congress, Speaker Pelosi's margin being razor thin, the Senate margin being razor thin, no matter which way it goes, you're going to see tweaks at the margin, and then you're going to see, going back to the very beginning of our conversation, a rollback of some of those executive order type actions that the Trump administration undertook.
So a couple of follow-up questions on that. With the individual HRAs, do you see any impact negatively or positively for employers on those? What is your position as it pertains to employers? Is it a good thing? Is it a bad thing?
Well,
Not to throw you under the bus.
According to CMS, the first thing that they have to accomplish is to get employees to understand what the heck an individual coverage HRA is. So they're doing all these surveys of employers and people are like, I'm sorry, what are you talking about? So there is certainly a level of education, I think, that still needs to be done to get employers of all sizes sort of even considering these. And look, the CMS folks were very candid and they said, everyone is drinking from a fire hose this year, right? You're trying to put out the COVID fires, the COVID emergencies, trying to, head above water with all of this sort of temporary regulations and relief and guidance coming from everywhere. So this was not the year that folks decided to revamp their health plan for different classes of employees. And so they're admittedly off to a slow start, but I think our thinking all along, and Scott, feel free to disagree with me here, is that the opportunity for these ICHRAs really is at the small to mid-size employer level. So one of the issues when these first came out was just the complexity of trying to do the employer mandate affordability calculations with these things. So if you send all your employees out to get to buy their own individual coverage, and the employer is subsidizing it through that HRA, how do you figure out what's affordable for every different employee? Especially if you're a nationwide employer, that seems very daunting. And then, how do you deal with the non-discrimination issues? And that also gets very complicated. So, but for the smaller folks, and then for folks who weren't extending coverage to, say, your part-time employees or your seasonal employees, those are eligible classes of employees where you could just offer the ICHRA and not your traditional group health plan. You're allowed to sort of divide those out. So that might be an opportunity to expand to populations that you're not currently offering to. Scott, I don't know if you have anything you want to add on that.
No, the only thing I would say is the rules for some of this were not finalized until pretty late in the game in 2019. And so it wasn't surprising to me that we didn't see a lot of take up on this for the 2020 playing year. So this was really, for 2021, it was really going to be the first full year so you could see what take up looked like. I have no idea from a market perspective what we're going to see on that. And you have the confounder of the pandemic. But the other thing I would note is we always thought you'd see more of this when employment got, was less tight, right? Where it was more of an employer's market. And we have now more of an employer's market. And so it's a better time for employers, I think, to reevaluate how they're providing certain benefits. So all a long way of saying, I think 2021 also may be a hard year to evaluate, but come 2022, I think we should get a really good taste of what it means and how popular this is going to be.
You mentioned transparency and drug prices. Do you anticipate any type of legislative success, I should say, impacting drug prices?
So on this one, this one's kind of interesting to me because I kind of had to go back and refresh my own memory on what the heck happened and why they haven't really done anything on drug pricing transparency yet in Congress. And I recalled that for the longest time, I think sort of a first step compromise position on, getting more insight into drug pricing and PBM operations was to inject more transparency into that supply chain, right? So that was kind of a common way of thinking about it. And then there were proposals, there were a couple of House proposals on how to do that. The Senate Help Committee had their big package that included the drug transparency stuff. And then all of that kind of died because the House came out with HR 3. I don't know if you guys remember that. And this is, a little bit of trivia here. The numbering of those bills, whenever they start a new Congress, they reserve those first 10. So HR 1 through HR 10 for their top sort of policy priorities. So HR 3 tells you that for the House Democrats, this was a huge priority for them. And I don't know if you guys will recall, but then they got bogged down sort of internally within the Democratic caucus, and then certainly with the Senate, about how far they wanted to push this drug, not transparency, but just the drug supply chain reform, drug pricing reform. So you'll recall maybe that they had suggested that there be CMS be able to negotiate prices with the drug companies on like the top 20 drugs, and then there was a fight about how many drugs should be on that list, right? And I think that those far more ambitious efforts just ran into a brick wall, right? And I don't see that dynamic changing, certainly in this new Congress. So question for me is Speaker Pelosi going to be able to get her more liberal caucus members on board with potentially a meaningful transparency effort if it doesn't go into some of those more aggressive areas where I think some of the conservatives and even the more moderate Democrats feel like you're getting awfully close to price controls? And so if she can't find that middle ground with her caucus, I just don't think we're going to see anything legislatively. But as I mentioned, they've been doing a lot at the agency level on this, and there is a lot that they can do. Certainly under the Medicare space, they've got a ton of authority there. So, I think most likely we're going to still see that as a regulatory type issue.
I mentioned that whole thing about the marginal changes versus the whole enchilada. See, this is a classic place, right? It's not that those liberal members oppose the transparency. It's that they want something more, and they're unwilling to take something less without also getting something more.
So switching now to COVID-19, let's start with any recent developments or developments on guidelines for a health and safe work environment. So, for example, if you can speak to things like workers' comp claims that relate to COVID-19.
So there have been some developments. I would start actually with the CDC's updated guidance because I think that from a practical perspective, that's going to impact the employers that have employees on site probably more than anything else. It's not mandatory, it's just guidance. But many of the states pick up that guidance through their executive orders and whatnot, requiring compliance with whatever the CDC edicts are. So they've lowered the amount of time that somebody who's been exposed needs to maintain a quarantine, I think from 14 to 10 days, for example. So that's just something to be cognizant of. In terms of workers' comp, a couple things there. Kate, what is it? 7 states, I think you said the other day?
9 is up to 9.
9, they're like multiplying. Have something in place that says that if you're, particularly for essential workers, if you're an essential worker and you contract COVID-19, there will be a presumption that you contracted it at work. Whereas normally there would not be that sort of presumption for an infectious disease. We don't track actual claims activity, so I don't know what kind of impact this is having in the market. I think our advice, which I maintain today, is that if you're in a position where your workers can telework without any significant erosion of their job performance for whatever your employment requirements are, you should think hard about maintaining that because the exposure issues here, we just don't know what they're going to look like.
And I think the only thing I would add to that, Suzanne, is I think Scott's right. The CDC guidelines really are the big driver here. But the EEOC has some really helpful FAQs on their website, like very practical Can I, test my employees for COVID before I let them back into the workplace? These types of questions. And what the ADA ramifications are there for different policies that you might set up for return to work. And I think they've done a pretty good job of anticipating where, employers' big pain points are going to be. But notably, their FAQs are, and they haven't been updated since this summer, I noticed over the weekend. They're really pegged to the CDC guidelines. So each answer says yes, because CDC guidelines currently say, they recommend that you stay home for this number of days, or, so on and so forth. So I would encourage folks, as you're starting to think through some of your policies, if you are bringing people back into the office, consult those FAQs, but also be careful to read them in conjunction with the ever-evolving CDC guidelines and the state, as Scott mentioned, the individual state requirements, because a lot of them have even more, like California, for instance, I think they have even more sort of stringent requirements in place than the CDC guidelines. And then similarly with the OSHA regime, the OSHA website also has some helpful information, but it's kind of the stuff you would expect, right? Like the PPE equipment, keeping people spaced out, sanitizing, that kind of stuff. I think I was reading that 28 states have put out their own guidance on workplace safety. So you want to make sure you're not just paying attention to sort of the federal space, but consulting those state OSHA websites as well.
You had mentioned, and I don't mean to throw you a curve by asking you to name states, but you had mentioned 9 states that had some safe harbors for their workers' comp issues, and predominantly we would expect to see that for healthcare workers. Were there any states that went broadly, more broadly than that, and said that there was a presumption in a normal business environment outside of the healthcare arena?
Yes, there definitely are. There are several that are broader than just healthcare workers. The most, I think, the common denominators between all of them are healthcare workers, emergency responders, public safety, folks like police and firemen, so on and so forth. But then there are others that go beyond that, even to more, so folks who are working for essential businesses, for example, so restaurant workers, food distribution places, this type of thing. So definitely encourage you guys to consult that. And we maintain a tracker for the council, Suzanne, and always happy to shoot that over to you so that folks can see what the specific states have done. And there are a lot more introduced. There's a lot more active legislation than just the 9. And we would anticipate when the states come back into session in January, we could see a lot more activity in this space. So.
And I'll use this time to plug also, we've got on the NFP website, we have a number of different resources under our COVID resources, and we do track these types of things as well as business interruption, which we'll get into in just a moment, and other items. There's just a plethora of information on our website, so I will put out there as a plug. But sticking with COVID-19, as you mentioned previously, you talked about stimulus packages. Let's start with the PPP loan program. Has there been any additional guidance from the SBA and Treasury regarding employers applying for the PPP forgiveness? Is there anything else you can update us on PPP, first of all?
What notable did they do last week, Scott? They changed the date on the top of the applications.
Oh, yeah.
So they're doing that kind of helpful thing.
Very helpful.
We really have not seen anything substantive, detailed out of them for months. In fact, I kind of am a little bit paranoid because I'm thinking, we haven't updated our materials in a while, what's going on? And it's because they're not putting anything out. But Scott, do you want to just talk generally about kind of what's going on in that space?
Well, they haven't put anything out except with one exception, right? They have issued kind of a questionnaire that banks are required to provide to anybody who received a loan of $2 million or more. And the questionnaire is really focused on this economic necessity certification that you made as part of your loan application. But they asked for a lot of information about economic performance after you made the certification. And so we've been working with clients to make sure that their responses to those questions are as accurate and as defensible as possible. But other than that, no. Our understanding is they are now starting to grant some forgiveness, although none of those larger loans has received forgiveness to my knowledge. But you're starting to see it move. They're also starting to miss the statutory deadlines on getting things done, which also does not surprise me.
Right. Yeah. So for those of you on the call, and I know that Scott and I spoke about this with you all a couple times when you were first seeking those loans. Now we're into phase 2 here. But for those of you who have filed applications with your lenders for forgiveness, we are hearing reports from clients of up to, I think the longest I've heard so far is 4.5 months for the lender to get back to somebody on their forgiveness application. Mind you, they're supposed to have 60 days. So just blowing right past that. But I think, they're nervous about making sure that whatever they ultimately submit to the SBA satisfies, all of what the SBA wants. And there are questions, as there have been throughout the life of this program. And so, and also, frankly, I imagine that just like they were when folks were originally applying for the loans, they're overwhelmed. And then, as Scott points out, it was only about 6 weeks ago that they put out this necessity questionnaire for the 2 million and above loans. And I'm sure that sent all the lenders then into a total tailspin. They had to get that out to their borrowers immediately. They have 10 days to collect it back, get all of the supporting documentation. So it's a moving target, but I guess I would say to folks, don't be stressed if your lender's late in getting back to you, because that seems to be pretty common. But also remember that even though the SBA has said it's not going to audit anybody below that $2 million mark for the need certification on your loan application, the SBA has reserved the right to audit any loan of any amount for any of the other things, right? So, if you were an employer that had a particularly tricky affiliation calculation for your number of employees, or, you went with one of the alternative size tests for, being below a certain revenue threshold, what have you, you want to make sure that you're spending, that you're careful when you submit your forgiveness application, because any violation of those other requirements can kick you out of forgiveness eligibility. So, worth spending the time, I think, to be very careful with your applications and with your supporting documentation.
So what is the Inside the Beltway talk about the next stimulus package?
I think we're looking at the Senate compromise. So I'll be in a lot better position to tell you in, I don't know, anywhere from 2 to 20 hours from now. I think we're going to see a bill. I think it's going to be in the $1 billion range. I think it will include some relief for state and local governments. I think it will include that $300 week addition for unemployment insurance. I think it will include some sort of liability relief. I think it's going to be tied to proving that you satisfy the applicable safety standards, which to me is nothing, because that's just a typical negligence standard. I think all they're going to do is codify it, just like we've seen done in some of the states. Although that said, I think that will be dissuading to some members of the plaintiffs' bar. But I think that's the sort of package that we're going to see. There's a big fight going on right now about this money that Treasury gave back for CARES Act loans and whether that can be repurposed. That money was loan money, and so under the budget rules of Congress, it actually didn't count as having a budget impact because the assumption was it was going to be paid back. So you can't really redeploy it into things like unemployment support because that actually has a budget impact. I don't think we're going to see much on the PPP, if anything. The things that we're watching for are allowing you to expense the amount of money you use to claim forgiveness against your regular income. That's something that's been widely discussed, and I think that the drafters originally intended it to work that way, but I don't think we're going to see it. You also could see some expansion of who can participate, particularly 501c6 trade associations who currently cannot. What else am I missing? You may see more money, but if you see more money, it's going to be targeted at super small businesses. They're going to get out of the 500 person or less, and I think you'll see, 50 people or less type of businesses. There's still $150 billion, I think, left in available PPP money. And so it's not like the program needs the money right now. I guess they'd have to extend the deadlines though, right, Kate? They'd have to change those.
Yeah, so the program, I honestly can't remember. So the last legislation, it extended the program till December 31st of this year, and I can't recall exactly why, but the SBA said for whatever reason they couldn't accept applications after August 6th or 9th. And so, yeah, I think they'd have to deal with that. Look, I think that in terms of just overall the COVID relief for another stimulus package, there was a lot in the Inside the Beltway press this morning about how basically Congress, you've already screwed up, you're already too late. That jobs report came out and there's clearly, damage that's been done to the economy, and it can't be, you can try to slow it down, mitigate, sort of the damage at this point, but that we needed those stimulus dollars months ago. And so there's a lot of criticism. So unclear whether that helps them find their way to a deal. And in terms of timing, it sounds like they're going to buy themselves a little bit more time before they recess for the holidays to get to an agreement. So what we've heard this morning, Scott, I don't know if you've heard anything different, but on my calls, they're going to do a short-term CR to get from this Friday to next Friday. So that's the government funding piece. So that if they do that, that keeps them in town for another week instead of having them recess as they had originally planned this Friday. And so at least, maybe they have a little bit more time to get to an agreement. But, I think that this is another example. We have a lot of these of not wanting to do something small in case it's, sort of screws up your plans to do something more robust, right? So Nancy does not want, sorry, I call her Nancy, she's my former boss, Speaker Pelosi, does not want to do something small, take the oxygen out of the debate, take the, the urgency out of the debate and let people say, oh, well, we did something, now let's wait for that to play through, which is, what we've seen since the CARES Act back in the spring. Because, she feels like if she's got one bite at the apple, she wants a lot more. And so I get that she's in a tough position, but there's also speculation about, come January, she has an even more difficult caucus to wrangle. So does she have a better chance now of getting to any deal that her House Democrats will sign off on than, come January? So there's a lot of moving pieces.
We have about 5 or 6 minutes left, and I've got a couple of questions that have come in, and then I had 2 more I wanted to ask you. So this is going to be kind of like rapid fire now. One of them a couple of people asked about any insight into the FFCRA extensions. So any extensions on those leave. Do you anticipate any of that?
I haven't heard anything.
Yeah.
This is the sick and FMLA leave for COVID related reasons. Suzanne, I honestly have not heard any murmurs on that.
Okay. Related to the stimulus package, I know there's been some requests by the Republicans to include liability protection. Do you anticipate that being included? And then also related to that, any high level thing you want to touch on with business interruption?
I do expect liability relief, but like I said, you're going to have to show you're in compliance with the applicable safety requirements. And so I'm not sure how ultimately impactful it will be. On BI, you're not going to see any legislation that moves anywhere that imposes retrospective obligations on business interruption carriers. There's lots of discussion about prospective programs and a so-called PREA, Pandemic Relief Insurance Act. I think that's going to be an issue for next year and maybe the year after. There's some litigation, as you all know. Most of it has really not gone very far, but now you're seeing a couple of examples for some carriers where courts are finding that there's at least enough there to warrant moving forward with a fuller examination of the facts, given the underlying insurance contracts.
And then lastly, as it relates to environmental coverage and now a presumed Biden administration, do you anticipate any issues related to in the environment that could impact employers as it relates to their environmental coverage?
I think you're going to see a lot of executive branch activity. So you're already seeing John Kerry, former senator, former Secretary of State, former senator from Massachusetts, is going to be our new climate czar. And that's really an internationally focused position, I think, to coordinate our response with the rest of the world. So I think we'll very quickly become a member again of the Paris Accord, for example. There's discussion about appointing a domestic counterpart that would look more internally. I think you're going to see a lot of revisitation of the orders that have come out of the Trump administration. So the denial to increase regulation of soot came out today from the EPA. I think you'll see some revisitation of all that in a Biden administration. On the legislative side, given the political dynamics, I don't see anything. I think you're going to see a lot of hearings, a lot of proposals. I think exactly nothing becomes law.
And is there any advice, I guess, that you would give employers as it relates to their environmental coverage? Would you requiring a second look or any of that likely to impact them?
I mean, I would always advise the employers that they should work closely with their brokers at NFP to make sure that they have
Good answer.
on what is kind of state of the art on that at the moment.
Good answer, Scott. We like that.
The one thing I'll throw in is a little bonus. There is the sustainability rules that came out of the Department of Labor, where they said you couldn't use that as a basis to make an investment decision. I think that's going to be one of the first rules that the Biden administration will attempt to vacate.
Interesting.
Agreed.
Kate, any last words?
No, I think we covered a lot today. I hope that everybody found it interesting and relevant. And again, really appreciate you guys having us back to speak with this group.
We thank you both. Thank you, Scott and Kate. As always, it's been a very informative, and we will definitely want to have you back again. Matt, would you like to close us out?
Sure. Thank you, Suzanne, Scott, and Kate, for sharing your valuable time and expertise with us today. To reiterate, we did record today's presentation, and you can expect to receive that shortly. That concludes our webinar for today. So we hope that you will join us tomorrow for the last webinar in this series. And thank you, everyone, for joining us, and have a great day.